Hey guys, happy Monday. Welcome back to another market update. And I don't know if my dogs are going to have another performance this week. I'm obviously not sitting on the ground, so that may have been the reason why they wanted to be in the video so badly last week. Also want to make mention of my shirt. I do realize there are holes in it. It is meant to be that way. It's Monday and I didn't have anywhere to go, so very casual today. But let's talk about this market because I do have an update that I think is going to be a good one for most of you. I think the market's changing a little bit, and here's why. So on March 11th, our CMI hit a record high of 514.9, which is the highest it's ever been. And for those of you that don't know, the CMI is our measure of supply and demand in the market, and it's a predictor of price appreciation. Anything over 110 is a seller's market, and we hit 514, so very high. Now, today, May 3rd, we are at 465.1. So remember, March 11th, 514.9. May 3rd, 465.1. So it's been going down, and I talk about that every week, but now we're looking at a really significant decrease. And it has not been crashing or going down quickly, but it has gotten to a point where, like, okay, this is definitely a trend, right? And this is largely moving downwards because our demand went down, still above normal, but it went down, and our supply is slowly starting to creep up. And so that brings us closer to a balanced market when you have supply and demand coming closer together. So that's kind of where we're headed. But the other indicator that Cromford is looking at to determine if things are starting to shift is the contract ratio. And that measures how many homes are available for sale as compared to how many are under contract. And our contract ratio peaked on April 1st. At 307.6. A normal range for the contract ratio is like 50. So really high, right? 307.6 on April 1st, 239.9 as of May 1st. So that's gone down as well. So now we're looking at two different indicators of our market that have both gone down. Again, not a crash, not anything like out crazy fast, but going in a different direction, most certainly as a trend at this point. The third point I want to make is that if you watched my video on Friday, I went through the data related to sellers cutting their prices on their listings. And because I personally, from the field, have noticed that there have been a few more price cuts, and it's allowed my buyers to get in a little bit better on some listings. So I was curious. I wanted to check out the data for myself, and sure enough, the last 3 weeks, there have been more listings that have dropped their prices or their listing price. So I was not wrong on that. So those two factors that Cromford is confirming, and then my observation as a third one, to me is showing us that the market is starting to maybe slow down a little bit. Now, prices are going to continue to increase because you have to remember price is a lagging indicator. Everything that is happening with our pricing data right now is from when we went under contract 30 days ago for the most part, or 60 days ago. So on average, price is lagging. So our prices are going to continue to go up because that's where the market's been. However, the CMI starting to trend downward and that contract ratio is telling us that in the future, things may start to soften. Now, that doesn't mean prices are going down. That doesn't mean prices are crashing. It just means that maybe we won't see 30% appreciation year over year any longer. Maybe it's 15%, which is still really good. So we'll see what happens, but I definitely think that there's enough indicators going on right now to make us think that that the market is just cooling a little bit. Whether or not it has a huge impact, we'll see. Also, I don't think that this is really anything that you would notice for the most part as a buyer or seller. I noticed just the price cuts, and that seems to fit in with the overall, direction. But again, like, I don't think it's something where as a buyer you can walk in and start offering under list price and expect to have things accepted. That's a little bit more of a rare case. But we'll see where things go. Supply is really the key issue to watch over the next 6 months, according to Cromford, because, our demand is what it is. It's not in a crazy area one way or the other. It's not super over normal, and it's not below normal at all. So our demand is really kind of in a decent place, but the supply is what is so low. So if we can get our supply to start coming up, it's really going to start to shift the market. That's really going to be what is our indication of things changing, if supply starts to tick up more consistently or faster even. So we'll watch supply. That will be important. And then one other thing I wanted to say, building permits are up 39% compared to March of last year. So if you compared, that's in comparison to March of this year. So March to March, building permits were up 39%. And last March, our building permits were up pretty extensively as compared to previous years. So that's just a little bit of good news. We need to continue to building here because we don't have enough homes for everyone. So knowing that building permits are up even more this year, it's a good thing. We got to continue the building in that direction. So if you have any questions, you know where to find me. Call, text, or email. You can also click the link below on my YouTube channel to set up a time to chat if you'd like to set up a phone call with me to discuss either the market or your situation or whatever you would like as it relates to real estate. So I hope you guys all have a great week. I hope this is helpful. I'll keep an eye on things for everyone. We'll see if things shift. Thanks for dealing with me in my ripped up t-shirt, and have a good rest of your week. Bye, Zoe.